Hey dads, if you clicked on this video, that's because you want to know a little bit more about what exactly is an IUL or an indexed universal life. Now, I realize that this is a very big wealth tool topic, and a lot of people have very controversial opinions of like, oh, it's the most greatest thing in the world, or otherwise, it's the most horrible thing in the whole world. And honestly, it's kind of both. Yes, it is all dependent on how it's structured. And so in this video, I'm going to explain the basics of what exactly is an IUL, how can dads use it, and the kind of different life stages of when it is beneficial and when should kind of avoid it. And so stick around to the end because this is a very big topic with a lot of different things, and I won't be able to cover everything in this video, but it should give you a good foundation on how I could be able to help you and your family if you would like to use it. Quick story about me. Again, my name is Keegan Telford, and I am a young dad. And something that was really kind of overwhelming for me when I first found out my wife was pregnant is I had no idea how money worked or how to make it work for me. And luckily, I was reached out to somebody who was actually teaching those kind of concepts. And what was really cool is after learning about everything, I was introduced to this really cool thing called the Index Universal Life. And it is now actually what me and my wife personally use, and where it is our biggest wealth tool for what we are doing. And the thing is, it does have some good things about it, but also if someone screws you over, make sure you use someone that you trust. It can be extremely horrible. But it has become the main wealth tool that me and my wife are using, not just for what we are trying to do and accomplish now in our lives, but also what we have for far into the future when we retire and do all those different kind of things. And we want to help our kids out with their stuff as well. And just a little bit about me personally, my nice luxury log cabin I eventually want to build one day. It's my biggest dream. You're going to hear a lot about that on this channel. So subscribe if you want to be able to see more obsessing about cabins and learning about financial literacy for young dads. Anyways, back to what exactly is an index universal life. Index universal life is simply those kind of words combined all together. It is first and foremost a life insurance policy. It can be used as a brilliant wealth tool, but is first and foremost life insurance. And that is something that a lot of people kind of get a little bit freaked about. It is like, what exactly does it function like? Just remember, it is a permanent life insurance, or it has cash value tied to it. Just a quick definition on those two. There are two types of main categories you can put life insurance into. One, which is term or temporary, where you're able to pay for it for like 5, 10, 20 years or so, and it's really cheap, but it only lasts for that amount of time. Whereas any kind of permanent insurance lasts your entire life, and it is a lot more expensive, but you're going to be able to have access to that always. And so instead of just renting life insurance, you actually like kind of putting down a down payment on it of sorts. That is an easy way to describe it, is that an IUL is a permanent form of life insurance, but it does have cash value tied to it that, if you use it correctly, is tied to an index, and it is able to become a brilliant wealth tool for you and your family if it is set up correctly. Remember this, there's a lot of gurus out there that say, oh, it's always horrible, or it's always bad. Don't listen to them. It's how you use it and how it is set up. Now I'm going to start going into a couple of details of how it works. If you have any questions, go ahead and put it in the comments, and I'll either address you directly then, or I'll even make a whole video about it. So go ahead and use that tool as well. First off, the term is indexed. Indexed means it is connected to an index, and it is not an index fund, it's an indexed account. And so it's not directly tied with any kind of Fortune 500 company or stuff like that. It is based on what another third-party company is able to say when money should be put in, when money should be taken out, etc., and so forth. And so the great advantage about this is that when your money is able to grow, it's growing with the index. But if the index should drop, your money is still safe and it doesn't lose in value, which is absolutely astounding. And I don't understand why not everybody uses this, because there's no risk there. And of course, there's always going to be risk with stuff, so don't take that too hard. But when the money goes up, your money goes up with it. And if the market goes down, you are safe. So that is the index part of Index Universal Life. Next part, universal, means it has a lot of flexibility. There's, of course, a lot of different terms that people can use for it, but the main thing you know is that universal gives it a lot more flexibility than some other kind of tools you may have heard of. Specifically, what are the premiums? Premium is the amount you invest into it each time. And that premium is split into two different parts. One part is going to pay the actual life insurance, and the other part is going to be going into the cash value part of it. So index, universal, and then life, it is a life insurance policy, as I described before. Remember, it is first and foremost life insurance, not an investment tool, but you can use it as a wealth tool if it is set up correctly. Now I'm going to go over how this actually applies to your entire life, and specifically starting if you just barely found out that your wife is pregnant and you need to be able to have something set up for them if the worst should happen, because we need to have these hard conversations. If the worst should happen, what is going to happen? It's going to first and foremost provide protection for your family, because if you should pass away and your wife and child is left with no income provider, your wife is either going to have to go to work, or they're going to have to go and live in with their parents or with her in-laws, your parents, for anything. And it could be a very rough situation depending on what it is, and very stressful, not good for the mother or the child. And so what the life insurance policy provides is a death benefit. And this death benefit could range a large number, from just a couple $100,000 to even the millions. And so you could really kind of shrink or contract or expand or contract it to whatever your family's needs are. And there, you should really figure out what that kind of stuff is. What you want is really 10 years of income replacement. So that way they have time to be able to take care of themselves. Be able to take care of any current debts you have, any of the mortgage that you have, if you want to pay for your kids' education, or a whole lot of other different things. There's something called the DIME method. I may make a video about that, but it is a simple way to be able to figure out what your family needs. DIME being debts, income, mortgage, and education or other expenses, stuff like that you want to have taken care of. And so that is what it could be able to provide in those first few years of you becoming a dad, and you need something to take care of you in the first little bit. The next part is when you have gone past the newborn young stage and you're starting to get into the growth kind of stage, where your money is still not really doing much, but it is starting to grow a little bit more. Again, something about the Index Universal Life is this is a long-term strategy. Don't expect that you could put something in for a year or two and then you could pull it out like crypto and other crap like that. This is a long-term strategy. Don't even think about using this stuff for another good 10 to 15 years. And the reason why I say this is because you need time to work for you. And this is where you get into the concept of compound interest. You could go into more detail about that with someplace else, but basically is that this is a long-term strategy. And so after those first few years of where you start putting into the account, you're going to then be able to start see it grow a little bit more. And what's really cool about the growth with this is what I referenced earlier, is that indexed part. When your money is in this account, it's able to grow with the market. But if the market tanks, your money stays right there. You're not losing any of it. And that is what a really cool part of it is. It's gonna be safe. You don't have to worry about any of the market crashing. And what's really cool about this too is when the market does crash and then goes back up, because your money never went down, it's going to be riding that high all the way back up, while everybody else is just going to be catching up to whatever they just lost. Another really important part to understand about all of this is there's three basic numbers you need to understand with your life insurance policy or the Index Universal Life. There is the death benefit, there is the cash value, and there's also the policy value. The death benefit is you're going to get if you should die and the worst should happen. Not good stuff, but it is good if you have it for your family. The second number is going to be the cash value. So the amount of money that you actually have access to that's in that account and that you could take a loan out against, which is also one of the best ways to be able to do things if you need to do a down payment on a home or anything. I'll go into more on that later. But it is wonderful to be able to use, because this cash value is what you have access to, and it can actually get added to that death benefit as it's able to grow. And the third number is the policy value. The policy value is going to be telling you what is the actual value of this policy at any date and time. And so for the first 10 to 15 years, depends on the company you work with, this number is going to be very different than the cash value, but they will match up eventually. And that is just part of playing the long game. You don't think of this as a 3, 4, 5 year. This is a long-term investment strategy, which luckily I am talking to dads. And so you guys have the mindset of I'm making long-term investments, which having kids is a very much a long-term kind of thing. And so I'm not really worried about you guys because you have the right kind of mindset, but that is something that people need to consider, is that this isn't something short. You don't give up after a year or so. You want to keep this for the long run. And it is with that long-term 30, 40 years or so, and you can even use it way before then, but it is with that long amount of time, this is going to become the best thing for retirement. But that's all for later. Another really important part about the Index Universal Life is it will often have living benefits or riders that you can be able to use that if you should get, say, a chronic illness and you only have a few months to live, you can be able to have access to all of that death benefit while you're still alive to help pay off any kind of medical bills. Or say if you want to take a crazy vacation with your family to spend last moments with them or buy that house, whatever you need is to do, you can have access to that while you're still alive after applying for with the company what you have really going on. Another thing is if you have a critical illness, say you have something really horrible happen to you, a car accident or something else, they will actually, after doing some appraisals and things, be able to get you more access to that death benefit while you're still alive to be able to replace any kind of income. And so this isn't just if you die. And that is the crazy thing, is this even applies to term insurance. You don't only need life insurance for when you die, but it is also applicable throughout your life. If something horrible should happen to you, these riders allow you to be able to use that money now and not after you're gone or something else. And so love that about the living benefits. Make sure you always check in and see what is available with your options on that sort of stuff. Now you're getting into the family building years where your kids are now older and they're teenagers and you've been using the same kind of things for a little bit, where you need to replace a couple cars, or maybe you're finally wanting to be able to build a home or something else crazy like that, start a business. This is the money that you can now use in that cash value that is available to you. This applies to so many different things where you're able to start doing home upgrades or putting a down payment on a home, getting a new car, and all these different kind of things. Because if you use this tool correctly, it is going to be helping you so freaking much. And at that point, you have become your own bank, which is amazing. And a lot of people don't use this, but it's freaking awesome if it is set up correctly. And this is really amazing because compared to other retirement accounts, you can have access to this at really any age. And you don't have to wait until a specific age or time to be able to have access to this money that you've been working for yourself. Another really important part about an IUL that I didn't stress earlier, but I need you to know now, is that it has amazing tax benefits. These tax benefits include that if you use after-tax dollars, it's going to be able to grow tax-free for the rest of your life. Not only that is it going to be able to grow tax-free, but you're going to be able to pull out of it tax-free. And it's going to go to your children tax-free. And I'm not saying there's anything wrong with taxes. Of course, we need them for things. But I think generally we all agree that we would rather have money being used by ourselves, not by somebody else. And so IULs offer this. And you don't have to pay deferred taxes on it. You could use after-tax dollars and just start investing and just let it grow and use it when you want to without having to worry about Uncle Sam ever again. And this kind of all wraps up to when your kids are finally out of the house and you're just wanting to start to relax and just focus on being a good grandparent at that point. I know that's kind of crazy to think so far in the future, but being a grandparent and you're getting to the point where you need to retire. And this is one of my favorite things about the IUL, is that it is a good option for supplemental income in retirement. Heck, it can even be your main income in retirement. And that's purely because if you were investing into it correctly, at sometimes when you had the ability, max funding it, which by the way, max funding it is just applicable to how much the premium is and how much you can put in. You do want to be careful of not making it a MEC contract, a modified endowment contract. That's going into the weeds a little bit, but if you are considering getting one, make sure you ask them about that so you could avoid getting a MEC. So you want to make sure it's a non-MEC contract. But this is going to be able to allow you to be able to retire comfortably in the way that you want to. And the advantage of me talking to young dads is that we have time on our hands. A lot of people have not been able to have all that time, but that's why I want to reach out to you now so you can actually start doing this now. Again, this is just one tool among many. It may not be right for your family, or it may be the best thing for your family. It is really up to you. And there's a lot of details that I have not been able to go over in this video just because there's so much to go with it. But I hope these simple explanations is able to kind of help you understand what different life stages an IUL would be valuable to you, and why I personally believe it could be both simultaneously the best and worst wealth tool. Just make sure that whoever you're talking to is somebody that you trust and that it is going to be all focused towards your family's goals and dreams. Again, I'm going to actually put myself out there and volunteer myself. If you would like to see what an IUL could do for you, or be able to see just kind of basic rough numbers of what this could possibly do, go ahead and go to the link in the description, and that is going to be a link to sign up for a free financial needs analysis. I want to make sure I get you guys good value so you could be able to actually take that and apply it to your families. But once you've signed up for that free financial needs analysis, we could be able to get an assessment of what are your family's goals and dreams and how we can actually build a actionable steps roadmap to be able to get you where you want to be able to go. And if the IUL is the tool for you, we will let you know about it. So go ahead and click on the link below and I'll be able to see you on a personal one-on-one appointment and see if this is the right wealth tool for you. Again, if you had any specific questions, go ahead and go in the comments and I'll be able to see what you want there. If you want, go ahead and get that like button. It's a really handy dandy thing that says you like this kind of stuff and you want to see more of it. Just click on that. And of course, go ahead and subscribe if you want to be able to see more of my stuff dedicated purely for what is good for dads and how dads can make money work for them, not just them working for money. Again, if you go over here to my latest video, it is going to be able to give you more information that is applicable to dads. And so go ahead and click on that video and I'll see you over there.